We are live now. Good luck, everyone.
Good afternoon, everybody, and welcome to the 13th report from the Climate Bond Initiative on green bonds and their recent pricing and volume that we've experienced in the bond markets. This report focuses on the second half of 2021, which was a very strong year for green bond issuance. My name is David Fury. I head up the Fixed Income Strategist Group at State Street Global Advisors, and I will moderate the panel here today. We've got a very, very strong panel of both issuers, investors, and researchers, which I will now pass over to introduce themselves to you today. First up, we have Caroline Harrison from the Climate Bond Initiative. Caroline, please introduce yourself.
Hello, I'm Caroline Harrison. I'm a research analyst at the Climate Bonds Initiative in London. For anybody who is not familiar with climate bonds, we are an international organisation working to mobilise global capital for climate action.
Thanks, Caroline. And now over to our first issuer. We have Asdrubal from the Spanish Treasury. Asdrubal, can you please introduce yourself and to the panel? Thank you.
Yes, of course. So I am Asdrubal de Benito, and I am in charge of coordinating the green bond program in the Spanish Treasury, and also all the ESG strategy of the Treasury. I am an economist for the state, and before assuming this task, I was in charge of analyzing energy and climate policies in the Ministry of Economics. So this track makes completely sense to say. Yes, since now I am coordinating this program with very good results, I think. Thank you very much.
Excellent. Thank you. Thank you, Asdrubal. We look forward to hearing your journey in the green bond market later in the webinar. Next, we have Emma Mernan from Smurfit Kappa. Emma, can you tell us about Smurfit Kappa, please, briefly?
Of course. My name's Emma Mernan. I'm Assistant Group Treasurer with Smurfit Kappa. We're a FTSE 100 company and one of the largest paper packaging providers in the world. We're an integrated, I suppose, paper and box manufacturer. And this, in 2021, we issued our inaugural green bond under our green finance framework.
Excellent. Thanks, Emma. We look forward to hearing how that went. And finally, we have Francois, who represents from the investor's perspective. Francois, please introduce yourself.
Hi, so I'm Francois Millet, responsible for strategy and ESG at the Lyxor ETF, now part of the Amundi group. So the combined Lyxor ETF, Amundi ETF is the largest ETF providers in Europe, and I had the luck to work on the first green bond ETF back to 2017 with the support of, in particular, CBI in terms of, selecting the bonds which are qualifying as eligible for the indexes.
Excellent. Thanks, Francois, and thanks everybody. So the format today, what we do is we'll ask Caroline to present the findings of her report. This will take 7 to 10 minutes, depending on how long we want to allocate to that, and then we'll go to each issuer and the investor and ask some specific questions. I will moderate the panel, obviously, and should anyone have any questions, feel free to post those into the Zoom chat, and we'll field those as best we can. And thank you again for participating. So over to you, Caroline.
Thank you. Thank you, David, for the introduction. We recently published the 13th iteration of our green bond pricing in the primary market research series, and I'm just going to start off by summarising the findings of that paper. So our pricing research is limited to bonds that are at least $500 million in size, denominated in either euros or US dollars. In the second half of 2021, $240 billion of green bonds were added to the Climate Bonds green bond database, and our research captures around 30% of that. which was 53 euro denominated bonds and 20 US dollar denominated bonds. Around a third of the bonds in our sample came from first-time green bond issuers, including our two panel members, the Kingdom of Spain and the Smurfit Kappa group. New issues continue to add much needed diversification opportunity for investors to this market. Unfortunately, there are still a fair few US dollar denominated bonds that are not included in the Climate Bonds Green Bond database and therefore cannot be included in this research because there is a lack of transparency around the use of proceeds. So there's more clarity is really needed in describing the use of proceeds of those bonds. Whoops. Okay, so I just want to start off with a couple of facts about the second half of 2021. So first of all, the number of investors looking for green bonds continued to grow. This demand is largely policy driven and reflects investor desire to align with the requirements of the SFDR regulation in Europe. And US policy is also introducing more accountability around responsible investments. Alongside this increase in demand, inflation started to gather pace due to post-COVID-19 recovery spending and rising energy prices that we are all very familiar with. The Fed started winding up its asset purchase program, and the ECB also announced plans to start doing the same thing, and was widely expected to start moving away from negative rates, which have been in place in Europe since 2014. Now, in 2014, the green bond market looked very different from how it looks today. So in 2014, Climate Bonds Green Bond Database records 37 billion of volume of green bonds from 168 instruments. So let's compare that to the end of 2021, when that same figure was over $1.6 trillion over almost 10,000 instruments. So the coming year will be the first time really that the green bond market has faced a rising rate environment in its current sort of setup. And it will be interesting to see whether the green label can offer any protection as investors perhaps start to shift their allocations away from bonds. So how did the green bond market behave in the second half of 2021? And that is really what our research paper tries to establish. So on average, green bonds achieved larger book cover and more pronounced primary market spread compression compared to vanilla equivalents. 66% of green bonds were allocated to investors describing themselves as green or socially responsible. In terms of the Grenium, we were able to build yield curves for 34 bonds in our sample. So in order to establish whether or not there is a Grenium, we first need to build a yield curve, not always possible. For those 34 bonds, half of them priced either on or inside their yield curve. In the immediate secondary market, green bonds performed better than vanilla equivalents and matched indices after both 7 and 28 days. And what we do to make that comparison is we look at the magnitude of the spread tightening and we make that comparison. So overall, these findings suggest that the green bond market can offer benefits for both issuers and investors. So looking a bit more closely at the Grenium and where it was present, this table explains that most of the Grenium was observed in the third quarter, while the fourth quarter, investors were sort of much more cautious, and indeed that's when expectations for the withdrawal of central bank support sort of sharpened, really. So I want to emphasize here that this change in the incidence of the Grenium is nothing to do with the market being oversupplied. The market is not oversupplied with green bonds. If it were oversupplied, green bonds would not be achieving the larger book cover and spread compressions we are seeing compared to vanilla equivalents. And large green bonds would not be achieving book covers of 10 or more times, 12 times in the case of the Kingdom of Spain, such as what happened, for example, the UK achieved more than 10 times. That to me does not suggest that the market is oversupplied. Rising interest rates and bonds are not the greatest of friends, and all types of bonds will be touched by this to some degree over the coming year and perhaps more. So in our paper, we highlight 4 sovereign issuers who came to the market in the second half of 2021. The Kingdom of Spain printed its first green bond, which, as I just mentioned, was 5 billion euros with a 21-year tenor. It was 12 times oversubscribed, and as you can see from this little chart, priced with a Grenium. In other words, inside its own yield curve. We have Asdrubal from the Spanish Treasury on the panel today, and he will be able to tell us more about the experiences of issuing this green bond during the panel discussion. Germany issued its 4th green bond, again using the twin green bond format that they have used for the past 3 issues, and again achieving a Grenium. The green bond remained inside its vanilla twin for the rest of 2021. Germany now has a secondary market green yield curve comprising 4 green bonds, which sit inside its conventional curve. So finally, I just want to end by adding a few words about issuing more green bonds. We now have more reason than ever to push for a complete shift away from fossil fuels, and green bonds provide a tested vehicle for gathering financing for renewable energy projects. If you are an issuer thinking of coming to the market first time, a green bond can bring the focus onto sustainability regardless of where you are on your sustainability journey. So the most important thing is to make sure that the use of proceeds are clearly identified, defined, and explained in all of your documentation. And, you know, please, if you are an issuer, do not be put off by the fact that the market is evolving and everything has not been fully defined and decided. As we will hear from both Smurfit Kappa and the Kingdom of Spain, you can issue following current best practice, and as best practice evolves, frameworks and things can be updated to reflect any changes as they happen. So thank you for listening. I will add a link to the paper in the chat, and I will now give the floor back to David. Thank you, everybody.
Excellent. Thank you very much, Caroline. Very interesting to see the growth in green bond issuance, not just in the sovereign space, which is not just in the corporate space, which has been growing continuously, but also we've had some new entrants on the sovereign side. So that's a nice entry now to introduce Asdrubal again. And Asdrubal, I'd just like to ask you a few questions about your program. Obviously, launching your inaugural green bond, that's a huge milestone for the Kingdom of Spain. Can you please, and this isn't an easy journey, we all understand that, but maybe you could just highlight the pathway that you guys took in terms of the preparation and the process that went into this, to reach this milestone, because we all know that it's great to launch a green bond, but it's not easy to get to the stage of having your sustainable finance framework in place. So maybe just just outline for us, how that whole process worked for you guys.
Yes, thank you very much, David. It was indeed a very important milestone and a quite a complicated process, very rewarding process, indeed, in terms of pricing, in terms of demand, of the diversifying of our investor base. Also, in terms of demand, it was very, very important. And also in terms, of course, of reputation. This is very important too. in any case, I think that one thing that we had in our favor is that we came maybe a little late to the market considering our intentions, because we want to come before, but we had the limitation of our budget. As you may know, Spain had a carried on budget for 2 years. So in 2021, we had the first budget in 3 years, reflecting the new priorities in climate change and energy. So this was a moment. But one good thing of waiting or coming later was that we were able to learn a lot from our peers and the people that had come before us. So in the first place, we realized that the most important thing was governance. We started with the creation of an intermediary working group that answers to the Council of Ministries, but retaining, in any case, the ownership of the project in Treasury. We were aware that long-term planning was very important, and this is a very complicated process, not only to start, but also to continue with it, because as you know, there is a very important reporting phase. And also, if we are entering in this market, at least from our perspective, it must be from a structural point of view. So this, the green bond program is going to become and is becoming a structural pillar of the treasury strategy to finance in the capital markets. Considering this, the first thing was to set this coordination framework, and then to start with the process. And the most important, I think, it's to determine the eligible expenditures, the first exercise, because it is there when you have to solve a lot of informational asymmetries. And maybe here in the case of sovereign, it's more difficult because we are issuing in all the sectors and regarding all the climate change and energy objectives. So there is a lack of information on our side, maybe from the tertiary point of view of what are programs of the ministries, and an information lack also on the ministries, because they don't know what is a bond and a green bond. So there is first this informational symmetry to be solved between the people that are involved in this project. And this, of course, is more complicated with the largest the issue, the larger the number of sectors that you are considering.
Yeah.
And yes, and also we had limitations regarding, as you know, the Commission is also issuing green bonds, and they are issuing green bonds with our budget. So with programs that are in the Spanish budget, this was a big limitation. Also, to avoid double counting was very difficult. As in public programs, there are usually a lot of sources of financing that comes from the, for example, European institutions that come from the regions, from the state, from agencies, etc. So there are a lot of sources, and this is complicated.
If I could just ask a question there. So obviously this is quite a major undertaking for a sovereign to get this sustainability financing framework in place. From start to finish, how long did that take you? And were there any maybe learning points along the way that maybe you could share with the audience here?
Yes, of course. So it took approximately from the creation of the working group to the inaugural issuance, it took 6 months. So from March, this was the creation. Of course, there was a previous work to September. This was but we could have done it before because our framework was published in July. So 4 months at least of very intense work. And once you have an idea of the governance you want to have, and then the most important things in the process are, of course, to solve all these informational asymmetries between the parties that are involved. I think that this is very important, and to know, of course, what you are doing. This is a complex product, and then also to care a lot for comparability. And this is where it is very important to learn from the others. And for example, in our SPO process, we learn a lot, but one would think of our SPO process is that the same entity that was verifying us was also verifying other peers. So we could compare, and the results would be very comparable. And I think this is a benefit that we will have once the EU framework is completed. It will be a very huge benefit that everything will be comparable, because we had to do this work on our own and to see what the others were doing and which was the best option to be comparable, because you have to take a decision. But we will have in the future a modality that will help to this process.
Okay, and then in terms of so the deal itself, then can you talk to us a little bit about how you engaged on that, you know, with the market, and you know how pricing was determined over the course of the launch, and maybe any trends or insights that you might have observed throughout that whole process that might be, you know, interesting for, you know, either other sovereigns that are on the line here today, or indeed investors who'd like to better understand that whole process.
Yes, so our contact with market was continuous. So we were constantly contacting investors, our pyramid leaders, of course, that are a very important knowledge network. And this was important during all the process to get their advice. What do you want from us? It was a recurrent question. And then once we had the framework, once we had the eligible expenditures, then we did a very intense work with investors during a week. We settled a lot of one-to-one and global investor calls, also to inform our investors about this. And then in the day of the pricings, everything was very smooth. The day of the deal, we had a wonderful demand of 60 billion, more than 60 billion, so up multiplied by 12 our supply. And then as the pricing is an issue that it's supply demand dynamics. The demand was very huge, so we priced with no new issue premium. So here we think that the Grenium will be this usual new issue premium that will be around 2-3 basis points. So very good results, and in terms of diversification of the supply, it was very good. We had a lot of accounts. We had this 66% of investors that Caroline was speaking about. So yes, in terms of results, I think it may be the best syndication since I am in the treasury list.
Wow, that's very interesting. So you were able to, I guess, garner a lot more interest from the market because it was green. Now, I just saw a couple of questions pop up there, so I'm going to pop those to you now, Astelbal. Can you tell us a little bit more about the use of proceeds and how you were defining that in this particular bond or in your program?
Yes, so the uses of proceeds and was well, as I explained, was one of our main concerns, and the work was mainly there. Because you have to search for eligible expenditures in a very big budget. In the case of a public issuer like the Kingdom of Spain, there are a lot of programs, a lot of expenditures. The people that have to analyze them have let's say an informational asymmetry sometimes. So you have to solve that before. And then in our proceeds were limited also by some factors, some very important factors. The first one I also already mentioned it, that was the Next Generation EU. So in the Next Generation EU, that of course includes the green bonds that are going to be and are issued by the European Commission. There are 29 billion of Spanish expenditures in energy and climate related sectors in 3 years. So these could not be in our proceeds. And in addition, we have also the regions in Spain. The regions in Spain are very important. We are a very decentralized state, and they even issue their own green bonds. We had and sustainable bonds. We have the example of Madrid, Galicia, the Basque Country, also that are very, very active in this market. And we expect that the Treasury's issuance encourages to more regions to come to this market. And in addition, we had to be very careful with finalist taxes. So taxes that already have a destination that are financing specific green projects. Like, for example, in Spain, in the case of renewables, we have more or less 5 billion per year in renewable expenditures, but those will not be included in this edition of the green bond because there is a finalist tax that finances them. So we were very, very careful with the content.
Okay, excellent. One last question for you, Astelbal, because I'm conscious we want to move on to the other panelists. But you know, in the context of the current environment, I mean, from our own experience at State Street Global Advisors, we very much view green bonds as this transition funding. Unlike equity capital that tends to be infrequent and permanent, you know, green bonds can provide that that funding to corporates, particularly corporates that mightn't be very green from the outset, but that can, need to make that transition. So we see green bonds as very much part of the funding that transition, not just of green technologies or green sectors, but also some of the worst emitters that need to get on this track. So from that perspective, how do you see the demand supply dynamic playing out here for sovereigns specifically? You've enjoyed your inaugural green bond at a massive oversubscription, but as you do more of this, how do you perceive the demand side of the equation playing out?
Sorry, I didn't know if I have understood. Referring to the question is about transition expenditures.
Sorry. Let me clarify. I was giving some context that the growth in the market, has to happen across all sectors. For you in the sovereign space, you had a very successful inaugural deal. How do you see, the demand for green sovereigns playing out going forward?
Okay, thank you, David, and sorry for the misunderstanding. So I think the demand will keep to be very, very strong, and the supply will grow, but it will probably not grow in the short term at the same pace than the demand. It's difficult, and we need to adapt to a lot of new regulation. And as you know, we now have the European taxonomy that is going to be completed, and the European Green Bond standard, that these are going to be very important pieces of regulation, and we will have to adapt. In our case, we had made the commitment to adapt to this new framework once it is completed, and the explanation is because we need to change all our regulation also to reflect this EU regulation. That sovereign is a different animal maybe that a corporate in this sense, but this will happen, and it's a very important line of work right now. But we will need to be able to answer to this if we want to continue to be successful in this market, of course. And I think this will be one of the main lines that will decide who is successful and who not, who can adapt to what the market is asking from investors.
Excellent. Okay, Asdrubal, listen, thanks very much for your insights, and congratulations on such a successful deal. I think it sets a great example to other sovereigns that this is the way to go, and that you can get diversify your funding base, get very, very attractive pricing in the process, and obviously use those proceeds in a very effective way. So stay there, obviously, and if should other questions come in for you, we'll pose them to you. But I'm now going to switch tack, and we're going to move over to the corporate bond issuer we have here today, which is Smurfit Kappa. Emer, as assistant treasurer of Smurfit Kappa, Smurfit Kappa is a very highly successful packaging company, and you've a very well established green financing framework. Can you please maybe summarize to us, to give us some context, summarize what it is Smurfit Kappa does specifically, and why you've such a high focus on sustainability across the organization?
Of course. Thanks, David, and good afternoon to everybody. I suppose our core activity is to produce sustainable paper packaging for our customers in order to package, promote, and protect their goods, to prevent, I suppose, loss or damage, waste through loss or damage in terms of their goods. And also, I suppose, while doing this with a material that's recycled, recyclable, and biodegradable. So essentially, I suppose, what we do is we create a sustainable product, and we look to do it in an ever more sustainable way. And by that, what I mean is we're continuously innovating in terms of our actual product, in terms of, shall we say, right-sizing the packaging for our customers, replacing plastic with more sustainable, I suppose, corrugated packaging like our top clip for cans, and also looking at our processes. So in terms of our processes, we focus on those areas where we think we have the greatest impact. So that would be, I suppose, reducing our CO2 footprint, the quality of the water that we return to the environment, reducing our water usage, and also, I suppose, reducing the amount of waste sent to landfill from contaminants that come in the recycled bales that we recycle. We also provide recycling solutions, I suppose, for our clients, whereby we have 44 recycling depots who recover paper, which feeds back into the overall loop, I suppose, in terms of the 75% of our raw material that's recycled corrugated boxes. So if I was to sum up our focus and why it's a key driver of our success, it's probably that, the sustainable product in a sustainable way. We report on our progress towards our long-term ambitions on an annual basis, and then that data is independently assured under GRI standards. We then convert that into customer relevant information, which then feeds back again into, I suppose, our design, our innovation process and continuous improvement. So I suppose that would be it in a nutshell.
Excellent. I mean, you've got very high sustainability values that are core to your business. So I assume coming to the green bond market with your inaugural deal, you kind of pass the test immediately, if you like, of the market in terms of your green credentials. But maybe just tell us a little bit more about your green, financing framework, how that was designed, and maybe that will explain why your bond deal was so successful in the market, and we'll get into that next. So maybe just a bit of context for the audience here in terms of that framework that had to be put in place and the process, etc., that involved.
Sure. I suppose I'd start off by saying that I suppose in terms of incorporating our corporate strategy into our financing, which is ultimately what was behind us setting up our green finance framework. But before that, we actually incorporated those 5 KPIs across, I suppose, climate, forest, water, waste, and people. All 5 of those were incorporated in our 1.35 billion RCF in late 2020 in terms of our deal with our relationship banks. Then in early 2021, we set about formulating our green finance framework in order, I suppose, so that our next bond, which would be our first one in about 20 years, going back to the market as an investment grade issuer, would be a green use of proceeds bond. And that was very much driven by the fact that we felt that, I suppose, our business is sustainable, the way we do it is sustainable, and we wanted to incorporate that into our financing. So when we set up our framework, we looked at it from the point of view of supporting that corporate strategy and the transition to a circular economy. So what we're looking at is particularly those SDGs, those UN SDGs around eco-efficient products, processes, around sustainable use of land. We have a certain amount of renewable, I suppose, certified forestry over in Colombia, not a huge amount, but we also buy, obviously, wood from sustainable sources. The 25% is all chain of custody certified, either through the PFC standards and those forestry standards, our own internal chain of custody standards. So it's all sustainable. So that was how we, I suppose, formulated our framework so that it linked directly to our business. And what we were doing really was incorporating what we already had into our funding strategy.
Excellent, excellent. So obviously coming to market now, you've been upgraded to investment grade. We don't need to go into the difference between a high yield roadshow and an investment grade one, but certainly in terms of the book building exercise for you in terms of pricing, the book, how it was built, the quality, if you like, of investor in that, and you can just give us some kind of flavor in terms of how that went for you guys, and how whether it was the insights maybe that you learned from that whole process.
Of course, I suppose we had been a BB+ issuer for a long time, so we were seen as a crossover credit, really. So while we were high yield, we were getting a little bit of investment grade interest in our paper, where people were looking for value, I suppose, really. But what was different here is we would normally have done intraday execution, which obviously reduces your risk going out to the bond market. Given, I suppose, the number of firsts that were involved in this issuance, it was our first time back to the investment grade market in 20 years. It was our first time bringing our green finance framework to our investment grade investors. And, all of that, we decided that we needed to do a 2-day virtual marketing roadshow. So we met with about 60 investors over the 2 days. And I suppose in terms of people looking at what type of interest is there in terms of credit versus ESG and sustainability, I would say sustainability was, I suppose, to the forefront of every conversation that we had. People were very well used to the credit and they were used to our sustainability story, but it was their first time looking at our framework and this having the financing element being involved with. So in terms of our book building itself, after the 2 days, we were oversubscribed by about 6 times. It's 6 times across either tranche. And just to give a little bit of context, we had a dual tranche offering 500 million 8-year and 500 million 12-year. And we priced this at 0.5% for our 8-year and 1% at our 12-year, which equated to 60 basis points of a spread on our 8-year and 85 on our 12-year. And in terms of the secondary trading, we probably tightened by about 2 or 3 basis points after we had issued, which is pretty much just where you want to be, because you want the pricing to be right. We don't chase the last basis point in terms of that. What we want is that our investors have got good quality paper and that it trades well in the secondary market, even though that doesn't obviously impact what we pay. So in terms of that, it was the lowest coupon in our history, as you'd expect. But I suppose what it spoke to more was the quality of the investor group, with very little tightening of that I suppose that oversubscription when we went through the whole pricing process. And green investors would probably, from our point of view, be seen very much as buy and hold investors. And we did see our secondary spreads staying fairly consistent, I suppose, right up until the more general widening spreads, I suppose, from early February with the more hawkish tones from the ECB, all of the geopolitical crises that are there at the moment, because I suppose the green bond trading in the secondary market is still going to be sensitive to, market events. They're going to impact no matter what. So in terms, I suppose, in the heel of the hunt, we were very happy with the investor engagement, with the level of investor.
Just on that, Emer, sorry to cut across you there, but just on that, so what are the types of questions or focus of investors on these roadshows? Well, what were the common areas of interest and types of questions you're being asked? I think that'd be interesting for the audience. Yeah.
Well, obviously the use of proceeds is a very, very big factor, and also a very big focus on the reporting commitments. So obviously we have committed to report on our allocation and our impact in terms of our projects, our eligible green projects. Now we are in a very lucky position because we already report across our group, I suppose, on very key KPIs that are important to the sustainability of our industry. So we can leverage quite well, I suppose, from what our wider group is doing and tailor it down to those eligible green projects that we're actually financing through our green bond.
Okay, excellent. Well, congratulations again on the deal, and really for setting such a high standard for other borrowers to follow. I guess you're in the luxurious positioning of having this, business built around sustainability throughout the circular economy. So I guess your credentials and your philosophy and everything is well established already before you enter this. Nevertheless, that does give us a great benchmark, I guess, for other corporates to consider. So thanks for that, Emer. I just want to turn now. We will have time for more questions later on. Some of them have come in, and I've posed them in the course of the discussion. But I just want to turn to Francois now for the investor's perspective. Francois, you're obviously launched several specific green bond ETFs at Lixor. Can you tell us why you did that, and where you saw the demand and what you see in terms of the market currently?
Okay, so actually we started quite a long ago in 2017. So at that time, the market was a bit narrow. So if we look at the universe of investment of the Climate Bond Initiative report, we are talking about investment grade, euro denominated and US dollar denominated green bonds of sizable amount like 300 million plus. Well, seen from the lens of indexes, because we're an index manager, we had something like 110 bonds of that kind in the basket at the beginning, exactly the same universe. Now we have 680, so there's a tremendous growth of diversification. And we saw, of course, in terms of drivers of demand, the fact that investors were willing to increase their green assets under their own net zero commitments, but also pushed by the regulations, especially with a fast acceleration with the disclosure regulation last year. And the diversification was going through so strong that we saw not only the growth of the market in terms of number of issuers and outstanding amounts, so We know that we have now something like 1.6 trillion of cumulative issuances in green bonds in the market, and Caroline gave the figures, but it was really driven by supranational and then corporates, like 60% of the new issues, essentially driven by non-financial corporates more recently. And then there was the emergence of this booming sovereign segment, quite recent over the last 2 years, which made that there was absolutely no excuse for an investor not to start using green bond. It had all the diversification and the granularity it needed to implement its asset allocation policies between the categories of investors, between the various geographies, and even between the durations objectives. So that's a tremendous evolution of the market, which essentially accelerated over the last 3 years, I would say.
Okay, excellent. So if I understand you correctly, then, this growth in the green bond market has also, diversified the exposure, obviously growth in sovereigns, growth in corporates. In doing that, then it makes the exposure itself, lends itself more to maybe an indexed approach, which you offer in this ETF format. Can you comment though on market liquidity? My understanding is that, given these demand supply dynamics of bond deals, they get very tightly held. Investors want to own them in their portfolios, and they're loath to let them go, even if they tighten on the after issuance. So, can you maybe give us the investment perspective there from an implementation point of view around liquidity of green bonds in the secondary market?
Sure. So we saw market liquidity improve as well over the last years. Just to give you an example, the average bid-offer spread of green bonds of the same category as the ones screened in the CBI report was somewhere between 30 and 35 basis points of bid-offer spread. So now we are more around 26 basis points, so it has evolved quite a lot. And even in episodes of market disruptions, like we saw at the end of February 2020, when the COVID crisis really sparked, we saw that actually the ETF markets saw large outflows of something like minus 35 billion euros and minus 15 billion euros in fixed income ETFs, so huge outflows because of this spark of COVID. And the assets we are seeing in the green bond ETF were extremely stable. It was a bit like if investors, in terms of reacting and cutting their risk, were cutting the beta of their exposure to rates through traditional ETF, but they were not selling at all their green bond portfolios, showing that it was actually located in more resilient allocations, parts of their portfolio and much more stable. So we see today a market which is more liquid, much more diversified. We see some individual green bonds which have bid-offer spread as low as 5 basis points for the best ones, like the KfW, for example. Of course, it depends on the duration of the bond. Mm-hmm. But the French OAT vert, which is 31 billion, has bid-offer spread of 12 basis points, to give an example, and we're talking about very long maturity. So there has been a very significant improvement in the liquidity globally, and the capacity, of course, when you are handling very large baskets which are diversified, to absorb subscriptions, redemptions in funds more easily than we used to do 3-4 years ago, at conditions which are sometimes even better than the one of the underlying market. So we see the additional layer of liquidity which is provided by the ETF market is offering, for example, bid-offer spread around 15 basis points for a couple of millions of trades, which is much lower than you see in the underlying market itself. So this has been a very, very strong improvement of the liquidity conditions overall, I would say.
Yeah, that's interesting. That sort of corroborates what we see at State Street Global Advisors. We do see green bonds as being, obviously very much important part of funding the transition, but from an investor's perspective, how do you incorporate that? How do you get that allocation best? For us, we like to incorporate it into our investment grade strategies by actually cranking up the allocation to green bonds deliberately in those strategies. But we are experiencing similar, I would say, they're not liquidity challenges, but it's not as easy to. Green bonds are more tightly held. I think that's one of the conclusions here. They're investors, because of the demand supply dynamic, they're getting lower allocations than they might like. and therefore they hold on tightly to what they have. So it'll be interesting to see, more issuers come into the space and maybe provide additional pockets of liquidity. Interesting there. I just wanted to go back to maybe one topic that we should really tackle here is that of greenwashing. And there was an article in the FT which we were quoted on last week, and there does seem to be somewhat of a witch hunt, if you like, out there by the media to try and unearth and really spoil what has been an excellent trend and growth in this market. Maybe Emer, I'm going to ask you. What do you think about the topic of greenwashing? Is it something you're concerned about, and maybe how do issuers make sure that they don't fall into that category?
Well, I think it's important, and I do think it's important to have your governance very much in place before, when you're setting up your framework. I think really the first thing you should be looking at is your governance over it, how you're going to allocate, your use of proceeds, being very clear on it. Who's responsible for the management of proceeds? How are you going to track the proceeds? What type of reporting? Thinking about your reporting, I suppose, that you have to do within a year of issuance. Thinking about it at the start so that you're doing something that you're capable of doing. Again, I would say, sort of senior involvement in your whole sustainability strategy and your financing strategy is very, very important. And I also think, though, that I think the majority of issuers, and I can only speak for myself, I suppose, particularly with regard to this, but we go to the bond market relatively regularly. It's long-term funding. We're funding our long-term business. It's not let's go and do this and ruin our credibility, because you really, everyone knows it takes very little you can be a lifetime building up your reputation, and then one false move, you can lose it very quickly and not be able to get it back. So from my point of view, I think, yes, greenwashing is obviously something that's to the forefront of people's minds. But I think from an issuer, what you're always wanting to do is you want to future-proof what you're doing. You want it to pass smell test today, but you also want it to pass the smell test into the future. So I think for us, it was very important. And I suppose we were lucky in terms of our reporting that we do already, but I do think it's very important to put all that governance in place at the start, because no one intends to greenwash, because you're not doing it for that premium. You're doing it really because it's part of your overall sustainability strategy. Yeah.
Excellent, Emer. That is interesting. I guess for Smurfit Kappa, it's very clear. And maybe for the Spanish Treasury you asked about, it's maybe those use of proceeds may not be as clear. How have you guys made sure that that's tight and that there's no potential credibility questions here?
Yes, so of course, in this regard, we have to rely in our ministries, in our sectoral ministries, and this is why the governance is so important, as Emer was explaining also, because everyone needs to have a clear idea of what the green bond needs in terms of information, and this is very important, because you're mixing sometimes people that are very experienced in the capital markets and people that are not. And so they have to understand what we are speaking about. They have to understand the criteria, and then they search for these. In our case, in the budget, in a very big budget, and we discarded a lot of expenditures just to be sure that there was no greenwashing, that there was no risk, and that our proceeds were of the maximum quality. And in fact, this work was reaffirmed by the SPO. That is also very important in this regard, because the SPO is not only the paper that is published, it is also the process that is behind, in which there is an exchange of opinions, of information with the SPO provider. And in our case, the improvement was very big in this previous stage to the final SPO, let's say. But in the previous stage, it helped us a lot, and to really have a clean use of proceeds to show to investors. And in the meetings that we have before the inaugural issuance and the global investor call, this was very clear for investors, and I think there was no worries. And of course, we also have to take into account, and it was saying it's very important. And in the case of the Spanish Treasury, we will always be in the capital markets. We are here forever. We can't go away from the capital markets.
Yeah.
So it will be completely against our interests and against the interests of any sovereign and I think any corporate to do that. If you plan to be in the capital markets and to remain there, you cannot play with greenwashing.
Yeah, excellent. No, I mean that's pretty clear. It's you're very aligned there. I mean, one of the words you used earlier, I think that sums it all up. It's around transparency and being very open with investors as to what it is you're doing and intend to do. And then to Emer's point, having the framework in place that controls for that and the reporting in place that evidences that. So I think there's some key takeaways. Caroline, from your perspective at the Climate Bonds Initiative, how are you guys dealing with this? Obviously, it's a major topic. I would say maybe at the corporate level more than at the bond level. But how are you guys managing and navigating and advising clients around this?
Well, for inclusion into our green bond database, we have to have complete transparency over the use of proceeds. And I did allude to that in my presentation because a lot of the green bonds that we're seeing, for example, from US issuers, do not include adequate descriptions, if you like, of the use of proceeds. That doesn't mean that the issuers are trying to greenwash, and it doesn't mean that the use of proceeds are not green. It just means that we need more clarity. So I would say to issuers, if you are coming with a green bond, please make sure that as much as is reasonably practicable, you describe in the greatest possible detail the use of proceeds. And I think from the perspective of an issuer, there is a very tender equilibrium here, because on the one hand, the issuer is trying to contribute to more green assets, expenditures and projects, etc. But at the same time, knowing that if they do get it wrong, they're going to be accused of greenwashing and have their finger pointed. And I think actually, I speak to perhaps 100 treasurers a year, and I genuinely believe that all of those treasurers go into the green bond issuance process with completely genuine intentions. I don't think anybody goes into it trying to say, oh, let's see if we can raise some money in the green bond market by building something that isn't actually green. I don't think anybody goes into it with that idea in mind. So I think broadly speaking, everyone is the best.
I think that's absolutely right, Caroline, and that's what when I qualified the question, it was that as issuers of green bonds, I think we're less, or issuers of green bonds are less likely to be accused of greenwashing, given the frameworks that are required in order to do it. And nevertheless, it is something that the media seem to hone in on whenever they're writing about this topic. So I think the lesson there for issuers, as we've discussed, is to remain transparent and have the right framework in place. Francois, there's a question here for you in terms of between Article 8 and Article 9. How do green bonds get classified along those lines for you when you're investing and the funds that you invest in, rather?
Okay, sure. So all our passive green bond funds are classified under the Article 9. And that's the case for most actively managed green bond funds as well. So the difference. Article 8 is funds which are incorporating and promoting ESG characteristics, and Article 9 are funds which are specifically pursuing explicitly an a sustainable investment objective. That's very important because we're in an era where, because of the SFDR, the disclosure regulation since March of 2021, and because of the preparation of the next stage, which is the publication of all the indicators pursuant to the disclosure regulation, our investors are desperately looking for indicators of impact and indicators like the percentage of taxonomy alignment or the so-called green share of their portfolio. And from that perspective, that the European taxonomy has entered into force on the 1st of January, and all investors and fund managers will start reporting on the 1st of January of next year. In the principal adverse impact, so the negative impacts they should measure, they should specify the percentage of their portfolio which is not aligned with the green bond standard, so everything which is not green bonds. And among the green bonds, they should specify which ones are aligned with EU green bond standards and which ones are not. And under the MiFID regulation, as also clients will have to specify in their preferences the magnitude of taxonomy alignment they are looking for. We need to bear in mind that green bonds have a specific treatment. We are not just looking at the balance sheet of the issuer globally, but for the green bonds, we will consider that 100% of the green bonds as securities will be considered as taxonomy aligned. So we are really at a period of time where we are all getting prepared and our clients are getting prepared to disclose better. So not only they are seeking for green bond funds because they are Article 9 aligned, like climate aligned bond funds, for example, following the European Union climate benchmark regulation. But on top of that, they are expecting from green bond funds to give a level of disclosure that will be higher than others. We know from a CBI study that at this stage, some 70% in terms of outstanding amount of green bonds from investment grade issuers are already reporting impact indicators. For example, the main impact indicators reported being emissions avoided. This is an extremely precious indicator for our investors, as they are themselves increasingly committing to their net zero targets. And in order to calculate their contribution to their own net zero journey, indicators which are reported by green bond issuers like emissions avoided, CO2 emissions avoided, are extremely helpful as well. So, yeah, I mean, that's clearly within the global ESG investment space. We believe that it's a segment where, as you just mentioned before, there is a framework, there is a higher level of different screen, because of course the bonds are self-labeled by the issuers, but always by relation to a framework, the green bond principle or a sovereign framework, with a second party opinion, with parties like the CBI, for example, which is screening the bonds to verify if they are qualifying as eligible with their own climate bond standards and taxonomy. And thereafter, we will now have to check that these bonds are aligned with the European Union taxonomy. So, among this very vast ESG investment space, the green bond space is probably one of the areas where we will see the highest level of standardization, I would say. Yeah, I mean, there's a lot happening there, obviously, for investors and issuers alike in terms of the reporting requirements, and you know, that they're only increasing as we go forward. So you know, getting these frameworks and reporting and data essentially in place is essential. I just wanted to you know, we're 3 minutes to go here, so I just wanted to go around to each of the panelists and ask them, you know, you've launched a green bond now. You're well on your way with your green financing framework. For those that are at the much earlier stage of this process, what advice would you? What's the key piece of advice you'd provide to them? Maybe Emer, I'll pose that one to you first.
Sure, of course, David. I suppose, but I distill it down into probably having the right people involved at all times, internally and externally. Sustainability is the perfect opportunity, I suppose, for cross-departmental collaboration, because it brings in your sustainability department, your corporate planning, your finance, your treasury. It should be overseen at the senior levels. So it also should have, I suppose, board engagement. Again, there's a wealth of expertise out there with everyone's banking group. But it's making sure that the right people are involved, and actually that the people who are involved really understand your sustainability challenges and opportunities, and sort of get under the skin of your industry and your business, so that they understand what exactly it is that you stand for. So to me, I think getting the right people involved and getting that right level of engagement right across your group, and reaching out to people who've done it already. I think everyone who's done it already is more than happy to talk to anyone who wants to talk to them. And things like we've our green finance framework and our SPO on our website. It's publicly available for anyone who wants to look at it, you know, and I suppose just reach out to people, because there's plenty of knowledge and expertise, and everyone's happy to share it.
Excellent. Thanks, Emer. Now, Astral, maybe briefly, if you could just, you know, give some words of wisdom to the sovereign issuers out there.
Very, very brief, and I agree with Emer. The first one, learn from others that have been here before you, and then I think it's very important, care for comparability. it is very important for comparability. For investors, it's very important. And François was explaining very well regarding indicators, regarding formats, and this will happen and will also boost your demand.
Excellent. Thank you, Astrobal. And Caroline, any final, I'll leave the final word to you before I wrap up.
Yeah, if you are an issuer, you're thinking of issuing a green bond, or you're even thinking of issuing a green bond, please go ahead and look into it. There's lots out there to help you. There's best practice. There are many experts in the market who will help you with the process, but please, you know, more green bonds are needed from all sources. So please think about it very seriously.
Thank you. Thanks very much, Caroline. Okay, everybody. Well, that wraps it up. I mean, we've covered a lot of ground today. I think the green bond market's growing rapidly. I think the standards are improving all the time. We've had some examples here today of, you know, some leaders in this space of what best practice is and what it means in order to have a successful deal. And remember, their success here is measured, you know, not just in the Grenium, but in the breadth of the book and deepening your investor base. And that has proved to be, you know, a good source of lower funding for issuers, and indeed some performance, if you like, for investors. So a lot more in this space. You know, there's only 2% of the US investment grade market are designated green bonds in corporates, and in Europe it's already at 7%. So we are seeing some strong trends here in Europe, and you know, we hope that we can continue on that with successful issuers and more investors, as we've discussed today. So thanks everybody for your time, and hope to see you at the next one.
Thank you.
Thank you very much.